All right, guys. Welcome. We'll give it like another 2, 3 minutes before we get the call started. So, in about 2 to 3 minutes, we're gonna get the call started, all right? So, just giving everybody time enough to tune in and get settled. Hope you guys are ready for a huge lecture today. Huge breakdowns on indices. And yeah, I'll talk to you guys here in about like 2 to 3 minutes. Let's give it, all right? Talk to you guys soon. Again, guys, welcome to everybody coming in. We're going to be starting here in just about 2 minutes. All right. See you guys soon. All right, guys. Do me one favor before we get started. Do me one favor for everybody that is currently on the stream. Send this link, share this link with all individuals that may be benefiting from this information. Share this link with your teams, share this link with your chats. This is a public call. I welcome anybody and everyone. The goal is to reach more individuals every single week. So if you guys are on the stream, do me one favor. I ask of you one favor while you're on the stream waiting for these next 2 minutes. Send this link to the person that needs to hear this lecture, that needs to see the trades breaking down, that could benefit at all from this information. So again, thank you guys for tuning in, and I'll see you guys here in like about 2 minutes. All right, guys, welcome to another episode here on Technical Tuesdays. My name is Bastion for all of you who don't know me, and welcome to another Technical Tuesdays. Okay, we are doing these Technical Tuesdays every single week. until, man, for all 2023, until further notice. I'm gonna keep tuning in with you guys every single week, every Tuesday at 9:30 p.m. Eastern time. If not, I will let you guys know through Twitter. So just letting you guys know, if you guys aren't following me, you guys can see the Twitter handle there in the middle. Follow me on Twitter. That's where I will drop most of the announcements for in regards to the YouTube page, and you guys can follow along my trading journal through that. Okay. Give me just 1 second. I just need to pull up one last thing while I set up here. Appreciate you guys tuning in. Can you guys drop some 777s in the chat? If you guys can hear me and see my screen, drop some 777s in the chat for me, please. If you guys can see my screen and can hear me loud and clear. If the music's too loud, let me know. Please do let me know in the chat. Yeah, awesome. Cool. Thank you, Coy. Thank you, Valerie. Cool. Jonathan, Gerardo, Juan, Salvador. Thank you guys for tuning in. I see a lot of familiar names, and thank you guys for always hopping on here and showing a lot of support. Cameron, nice. Cameroon. I like your ad name. Cool. Awesome, guys. Since you guys can hear me okay, we can see the screen okay, we're gonna go ahead and get this started. All right, so guys, we've been talking about the DXY for a while now, right? We were pretty bullish on it up until what just happened in April. We finally got a nice confirmation to the downside. We are officially bearish on the dollar. We're officially looking for more downside, even though prior to the closure on the April, we were already anticipating the shorts for these double bottoms, right? So in reality, we're now just getting a confirmation to our bias, right? It's not that we're guessing or we guessed it. We have the market to tell us that our bias is going accordingly, right? So on a monthly perspective, this is what I want to teach you guys, and this is like super powerful. Okay, this is a concept that I've learned from ICT. Okay, if you guys don't know who that is, he has a free YouTube channel. You guys can check him out, the Inner Trader Circle. That's one of my main sources of information and style of trading. So it's, you know, if you, for all the individuals that have been wondering where I've learned all this stuff, where I've got all my information and all my trading style, it's from, I guess, from like 3 people. I learned retail trading from a market maker trader, okay, the Steve Morrow, like those type of traders use a lot of indicators, but they were time specific. So I learned times through market maker method. I learned liquidity through V for Valentino, Iffy Valentino. That man right there taught me everything I know today about liquidity. When it comes to internal and external, he's the one that put me on, and I just ran with it. Okay, so V for Valentino, ICT, the Inner Trader Circle, and of course, Inner Trader Circle put the theories together for me. And at last, I met Matthew at Abundant Capital, and he put structure and wick off. So as you guys can see, like, I'm a mixture of a bunch of different phases that I went throughout my trading, trial and error of testing out trading plan, testing out strategies, and I came across these concepts that I'm going to be showing you guys throughout this whole year. The market every single day is very different. Every single week is very different. So I never know what I'm going to be talking to you guys about. I really don't. I never know what I'm going to be talking to you guys about the week before when I schedule these. It's not till the day of that it gives me a pretty good understanding of the topics that we're going to be covering, because again, the market environment changes every single day, week by week, and is very unique. Okay, so with that, you guys can imagine that today we're going to be talking about something that has to do with our current trading, okay, or the current environments, and it's called the power of 3. Okay, write this down. The power of 3. The power of 3 has to do with 3. It's a very simple theory. Okay, very simple tactic. Okay, and it's all about the opening price. Okay, you guys can see it on my screen here, that line. The opening price. Okay, And if basically what this is saying, if we're going to be bearish, we're going to see a manipulation to run for liquidity. Okay? A manipulation to run for liquidity, right? And then we're going to see the distribution of orders. Okay? And so this is what I kind of wanted you guys to look at a candle, right? So the body, obviously the closures over here. Oh, sorry. But I could draw it. There we go. And so the body of the candle is right here. So again, if we're going to have a bearish candle, right? If we're going to have a bearish candle, we can anticipate the manipulation to run for liquidity. Okay? That has to be in place, right? And so when you look at the open and you see, okay, if my bias today is bearish, then I'm going to look at the opening price. I'm going to look for liquidity above it, or a point of interest, an imbalance, whatever it may be. You're going to look for liquidity above it to manipulate price to, and then we're going to see the distribution. And that's what's going to create the body of the candle, a bearish candle. Usually, not always. What tends to happen is we have the open, the manipulation to distribution of orders. Okay? So now let's look at a bullish example. Okay? So now, if this was a bullish example, right, we would have the open, the manipulation to the level of liquidity, and then the distribution of orders, right, causing the expansion. Okay, drop some 8s in the chat if that makes sense so far. I need to make sure that you guys are following up with me, because this is gonna get super fractal. All right, we're gonna go fractal today. So make sure that that I want to make sure that everybody's following along. So drop some 8s in the chat for me if this is all making sense so far. Thank you, Selena, Juan, Jonathan. Thank you. All right, cool. Valerie, awesome. All right, as long as we got a good chunk of people that understand the concept, then we can move along. Give me 1 second. I think the music's a little too loud on my end, so 1 second. Let me know if that gets too loud at all on the music end, or if it's just not even loud enough anymore. But either way, I just want to make sure you guys can hear me loud and clear. And yeah, all right, cool. Ozzy, my boy, thank you for being here today, brother. Welcome. All right, so again, very fractal. So now we're going to add this theory to all time frames, and I'll show you guys why this is so important for you guys to follow. Okay, so now we're going to look at and treat every time frame like we were looking at the daily. Okay, so now we are anticipating shorts. Right? We're anticipating shorts. So we will look for the open. Okay. Then we're going to look for liquidity. So give me 1 second. For some reason that line did not like the weekly time frame. Hold on. There you go. Okay. Then we go down to the weekly. Then you guys find the open, the manipulation to a level of liquidity or support or resistance. Okay, and then the distribution of orders, right? Does that make sense? So if I'm looking at a brand new monthly open candle, I'm going to anticipate some bullishness. If I'm looking for a short month, for the month of May to be short, then I'm going to look for the beginning first few days of May. Sorry. If I'm looking for May to be short, then I'm going to look for the first few days of May to be bullish. And I have to look for a level of resistance to short from, right? And vice versa for a bullish scenario. Nope. Vice versa for a bullish scenario, right? We have the open, right? The manipulation to a level of liquidity to the downside, okay? Because we're anticipating bullishness, then at the open we should know that we're going to have some down movement to manipulate us to liquidity. Then we run for the highs. Okay? Hi, Ariel. Thank you for tuning in. I appreciate you tuning in. Okay. All right, guys. So now do me a favor. Drop some nines in the chat if you're following along with me so far. I just need to make sure you guys are, this is all making sense for everybody. Drop some nines in the chat for me. Okay. Awesome. Awesome. Thank you, Valerie. Juan. Gracias. Ozzy. Cool, cool, cool. All right. So this is gonna go more and more fractal as we get into it. All right. So now we're seeing this on a weekly perspective. Okay. So now we get the opening price on a weekly perspective. Okay. We're anticipating a bearish week. So then we go down to the daily. Okay. So at the open, right? At the open, we're gonna anticipate what? Manipulation to the distribution of orders. Okay, so then we got the manipulation at the open, bullishness. We came into a level of resistance or liquidity, tapped into this 4-hour imbalance. Okay, and then price action started melting towards the downside. Right? So now we can anticipate that we had the open, our manipulation, and now we have our distribution of orders. Right? Okay. So I'm glad you guys are following with me so far. All right. So now because I noticed that DXY and the indices have not been in full correlation lately, because we haven't seen that full correlation on them, you can anticipate that or not anticipate, but what you can understand from indices and the DXY so far, or what I understand from the indices and DXY so far, is that we don't use the DXY to give us our directional bias. We don't use DXY to give us our directional bias for the indices. We use, and write this down, we use DXY, okay? We use the US dollar index to complement our already determined bias on indices. For example, I was pretty short all day on indices today. Okay, pretty short. We knew that we were gonna dump due to yesterday, right? Yesterday's distribution. So we were pretty short. But what did DXY do? It shorted as well, right? So what does that tell you? So if DXY also shorted, okay, then you can tell that the correlation between them wasn't complementing each other, right? And so sometimes you guys will have a bias on indices that is going to get thrown off by the DXY. So I always say, if you're going to determine things because of the DXY, what I highly encourage everyone to do is, if you're going to use the DXY, use it to complement your Dow, NASDAQ, and SPX, but not to give you like the bias for the day. Because you can't just be short, as you guys can see, you can't just be short on DXY and long on Dow or long on NAS, because it didn't work out today. Okay, more often than not, it does work out. But the better approach to this, or the improved approach to this, would be, of course, not relying on the DXY for the directional bias, but relying on it to complement your bias. So let me tell you guys what I mean by that. So for example, like on Friday or Monday, so yesterday, we'll go over this trade that we had yesterday. Okay. And by the way, always taking note of the new week opening gaps. Okay. New week opening gaps. And now you guys have that power of 3 to add on to you guys' confirmations. Okay, so you have, and excuse me, it's super hot here for some reason. I don't know what it is. Sorry. I don't know what it is about the stream that throughout the stream I start sweating. I don't know if I'm nervous or what, but yeah. So what I mean is, for example, if I'm pretty bullish, my bias was pretty bullish on Dow Jones, right? My bias was pretty bullish on it on Monday, coming into Monday, and so I wanted to see some longs. Okay, If I wanted to see some longs, okay, that's my bias for DX for Dow. That means I would prefer if the DXY went short throughout the time that I'm in my long position. That doesn't mean that DXY needs to short for the whole day, but throughout the time period that I'm in my trade and looking for my longs to play out to my target, then I have to anticipate that DXY could short throughout that period, and that would complement my bias. It would support my long position. It wouldn't confirm it, it will support it. Okay? It doesn't confirm it, it supports it. Okay? So it's a really good way to just not being misguided by DXY. See, this morning the DXY was not the reason that I didn't short. I'll show you guys the reason why I didn't short. But as we're walking through this, okay, we're going to again mark out all your new week opening gaps. So let's say you're looking at this whole daily range. Okay, this is our whole range currently, from that low to that high that swept a major high. Okay, that's our whole trading range right there. Throughout that entire range, I need you to mark out all your all your new week opening gaps. Okay, all the weekly opening gaps, okay, those are the ones that you need to mark out throughout your current range. All right, don't have them marked out beyond your current range because you probably just don't need it. It'd just be extra stuff. But now that we came down to that low, we see the new week opening gaps. Okay, so the new week opening gaps are a very strong level of resistance, support and resistance. You can look at it as a weekly support or resistance. Okay, look at it as a weekly support and resistance. And I'll show you guys yesterday out of our longs. Okay, yesterday out of our longs, you guys can see that Dow Jones was pushing to the upside, respecting that Asian low. Okay, now Dow Jones had not taken this level of liquidity yet. Okay, and so check this out. Nasdaq yesterday had already taken that Asian low. Okay, by the time we were at the open, had already taken the Asian low. Not just that, it had already taken the previous daily high during London and had taken out the Asian low by New York, meaning that Nasdaq has already taken both higher time frame liquidity and intraday liquidity before the open even took place. Okay, so now liquidity has been ran on Nas, and so you can anticipate that when liquidity is ran, we're gonna stay within that range for that day. Okay, so Nasdaq was immediately out of the question for me. I'm not gonna trade Nas. So that level of divergence, I want you guys to see this. Look, low, and then a lower low, low, and then a lower low, right? And then on Dow, higher high, higher low, higher high, higher low, right? We were pushing upwards and still had liquidity to the upside. So that divergence, okay, plus the complement of the DXY shorting at that moment, right, was giving me that long bias. So now initially for the day, before I even looked at Nas, I look at Dow. And so I said that, wow, I would really love some longs below the Asian low. Okay, so I was looking for longs below Asian low. And what I noticed is the following. This is what I'm going to show you guys, and I've been talking about it since the beginning. It's the power of 3. Okay, so I use that in every single time frame. So let's go back and do this. Okay, I'll share with you guys all my recent findings in trading and everything. My most newest finding in trading is that I will not, okay, I added this to my trading plan because I work on my trading plan every single week, every month. Okay, and something that I've been able to prove to myself in my trading plan is that my trading hours were a little off. Okay, for the past like 3-4 months, even the past like year, I have recorded trades, okay, from my trading journal that shows that two things. Thursday are my most common losing days. Okay, so I'm very cautious on Thursdays. And then I mostly lose money between the hours of 9:30 a.m. to 10 a.m. So now I wait till 10 a.m. Okay, I wait till 10 a.m. for the liquidity. Sometimes, like today, or this morning during New York, sometimes that's gonna bite you. You know, it's gonna shoot yourself in the foot with that, right? I know I did this morning, but most of the time, this is where you have to prove yourself and your trading plan. It's probabilistic, okay? So what happens more often than not? For me, I do catch trades between 9:30 to 10. I have successfully, but more often than not, my probabilities are that my stop loss is gonna get hit. And I have documented proof that after 10 a.m., between the hours of 10 a.m. to 11:30 a.m., I tend to catch my best moves. So that's what I stuck with, right? That's what I'm gonna stick with. So now let's fast forward to 10 a.m., okay? We have this whole expansion to the upside, okay? And this is what I want you guys to study. Check this out. Look at this. So if we're going to have a bullish candle, okay, and let's pretend here for a second, this is like the 1 hour time frame, and this white bullish candle here on the right is a daily. People seem to understand this a lot better when it's the daily. So we'll pretend this is the 1 hour, and on the right we have the daily. Okay, so we're gonna cut off the daily real quick. Boom. Okay, cut off the daily. All right, so now we have the opening price, right? I was showing you guys that, right? So we have the opening price of the daily right there. We have what happens at first. Drop it in the chat. What happens after the open? What's the power of 3? What's the next step? Power of 3. Drop it in the chat for me. What's the next step? And Valerie, I will answer your question here in a little bit in regards to the dollar. I think that's a really good question. We can talk about it here in a little bit. So power of 3. It's the open. And then drop it in the chat. What's the second thing after the open? Manipulation. Yes, Juan, thank you. So we have the open, the manipulation. Jonathan, thank you, to run for liquidity. So now look at this. Okay, now look, if you look at the daily time frame, if you look at the 15 minute, the 5 minute, the 1 hour, if you treat every time frame like you do the higher time frames, dude, everything comes together. When they say this shit's fractal, it is. This stuff really is fractal. And when you start treating the higher time frames like you do you start treating the lower time frames like you do the higher time frames, everything clears up. Okay? So now we're gonna pretend this is the daily candle. We're on the 1 hour. We have the manipulation of price, which is right here. You guys can see it on the right. You have that higher time frame, and you sweep. Look at that. We sweep right here. That liquidity. That's the manipulation. So if we're anticipating bullishness, because that's what we said, we're anticipating bullishness. We're gonna anticipate a manipulation to the downside to a level of liquidity, okay, or support. Doesn't matter. It could be an imbalance. It could be a breaker. Check this out. We have a breaker over here. Okay, it could be whatever you guys want to call it. Okay, any of those. So we have them. We're anticipating again. The power of 3 only works when you can anticipate what's the closure of the next candle, if it's going to be either bullish or bearish. Okay, so we're going to have, because NASDAQ had swept the Asian low, I didn't anticipate Dow to sweep the Asian low, given that it's a stronger asset. You guys saw the divergence on it. We had a bullish divergence on Dow, and don't anticipate any more lows to get taken out. There is there's one thing that I will tell you guys is I am looking at intraday liquidity like I do my higher time frame liquidity. Intraday liquidity, what is intraday liquidity? It is the sessions, what's within the day. Just look at it. Anything within the daily time frame is intraday liquidity. It is the Asian session, the London session, the any of the sessions within the day, those are liquidity. Any of the 4 hour and 1 hour, those are intraday. Right now at the moment, I've only dialed my intraday liquidity down to the 1 hour. So I look for liquidity from the 1 hour and above. Okay. And so I haven't worked my way down to the smaller time frames yet, but promise you guys, in a couple of years, you guys will see me do exactly what I'm showing you right now, but on like the seconds time frame. I know that this theory is powerful and it's gonna develop and only grow from here. So again, the open, you have the manipulation. Boom, we take out the lows. Then what's after manipulation? The distribution of orders. Boom, we start distributing to the upside. Then what did I tell you guys? You have to wait till what time? You wait till what time? What was I just talking about? $10 a.m., right? 10 a.m. Perfect. Yep. 10 a.m. So now we're going to go down to the smaller time frames, right? You guys see the manipulation. All right. You guys see the manipulation. Now we have to just only wait for the open, right? So now the same thing. We wait. We wait for the open. And we line things up. So now we have the open there. Cool. We line things up. We have our new week opening gap. Okay. Our new week opening gap. You have this bullish breaker here. Okay. And you have this imbalance there as well. Okay. So you have the breaker. 1 second. Okay, you have the breaker there, the new week opening gap, okay, and I line these up to where they overlap. So that's where my entry point was based out of, where they overlap. So notice, I'm not just looking for one entry point like the breaker. I'm looking for multiple things to line up within my manipulation zone, okay? So now, same thing, guys, same thing. Look. You're going to wait for 10 a.m. That's 10 a.m. right there. 10 a.m. right there. So now if we anticipate bullishness, again, we're going to go with the open, the manipulation to a level of support, right? The manipulation to a level of support after 10 a.m., right? The liquidity has already been taken, right? You guys already see that. Liquidity over here has already been taken. I already took out the low. We don't need to go any lower. You can anticipate that this low is the range. Okay? And then you line up multiple confirmations at the open. You have the open, manipulation to distribution. See how that 1 hourly candle was just like the daily? Right, we anticipated its bullishness, so it goes down, then back up. Right, manipulation to distribution. And I believe, where's the 10 a.m. candle close here in like 1, 2, 3, 4, 5? Okay. Look at that. Look at our 1 hour candle. And you can treat that one as the daily. You can treat it as the 4 hour. Guys, this concept is very fractal. But I need you guys to do me one favor. Drop some 2s in the chat if this so far is clicking. If something is making sense. Like, Bash, this is starting to click. On an intraday perspective, this is making more sense. Drop some 2s in the chat to show me that you guys are comprehending this theory. Awesome, awesome. Wow, you guys are awesome. Thank you guys so much for the support. Got some 7s in there too. All right, cool. So then you got, again, the manipulation, right? And it's so powerful. What, right? All we did was anticipate a bullish candle. Then you got the open, the manipulation to distribution. Okay? So, who's gonna back test this week? Who's gonna actually put in the work and back test this week? Who found this helpful and thinks that they could potentially utilize it for themselves, potentially utilize it in their trading? I want to see who's gonna back test this. And guys, again, it's super powerful. As soon as the live ends, that's awesome. I'm glad. I'm telling you guys, this is super powerful stuff. Okay, so we're going more like on an intraday perspective. For the first half of the year, I've been just talking to you guys higher time frame, engraving into your analysis, top-down analysis, weekly, daily, month, all of those time frames all the time, rehearsing higher time frame targets, rehearsing power of 3 in the bigger time frames. Now we're diving into the intraday. We have yet to dive into the small, lower time frames, the really tiny ones. We have yet to dive into those. We will get to that. We're working our way down from top to bottom. We went through the first whole quarter of the year talking all about higher time frames and the importance of higher time frames and journaling, right? Now we've laid the foundation. We've laid a strong understanding. Okay, now we're going into intraday. Okay, so intraday goes all the way, for me at least, is anything within the daily, and it's going to go all the way down to the 1 hour for now. I will show you guys as I get better with it myself, more intraday and smaller time frames. But for now, intraday will go down all the way to the 1 hour. And so all you have to do is around the 9 to 10 a.m. Okay, you want to look for liquidity. And it's not always going to be higher time from liquidity. That's what you guys need to understand. You can't always wait for previous daily lows, Asian lows, and all that stuff. Sometimes it's going to be as simple as this. Check this out. This is the 1 hour. This is the 5 minute here on the left, right? And this is the 1 hour here on the right. Look at that. You get the run of the lows, intraday liquidity, the 1 hour previous low. I'm pretty sure it's also a 4 hour low, right? Look at that. Look how we swept that 4 hour low right there. Boom. Previous intraday liquidity will help you find your daily, will help you get to your daily targets, your higher time frame targets. Okay? And I'm going to get back to a really good question that we got asked here. And it was, what do you think is going to happen with the dollar? Could you give me 1 second. Okay, can you give some ideas of what to do in order to be prepared for what's coming? I will read you guys a quote straight from my journal. Okay? A quote straight from my journal, all right? And it's 1 second. The self-studies, give me 1 sec. I have so I was reading, what was it? I think it's Ego is the Enemy. Yeah, I think it was either Ego is the Enemy or the Obstacle is the Way. That's what it was. I was reading The Obstacle is the Way by Ryan Holiday. Okay, and so The Obstacle is the Way. In Obstacle is the Way, they talk a lot about hard times. Okay, and so The Obstacle is the Way talks about how we need to embrace hard times. Okay, so the best way to come up in life, the best way to get above your current environment, your current life, your current status and situation, is to embrace what you're going through now, right? And understand that the only way that you will be able to grow is through obstacles. Okay, is the best way to grow as an individual. These things will either make you or break you, and it's a true statement, because most people choose to be broken by their external circumstances. Okay, but you can choose, the power of choosing. You can choose to have a great experience from every every moment that may seem detrimental, may seem like something may happen, or here, I'll read you guys the quote. I'm just gonna read it to you guys. Give me 1 second. Give me 1 sec. Yeah, it is right here somewhere. So I have a bunch of notes that I write throughout on my journal. So this is I'll show you guys this. Actually, I'll just we're already on here, and I think this is really cool. Give me 1 second. Let me capture this. Okay, and I'm sure you guys can see it by now, right? You guys can see the obstacle is the way. Okay, so this is how I journal, like, my books. Like, I'll take a picture of the book or the audio, whatever it is, and then I'll get in there and I'll start taking down notes of everything that really, like, was very impactful to me, that made a lot of sense to me, and that helped me or impacted me very strongly. So I'll show you guys that most things that people are afraid of are usually things that you need to embrace. Okay, so simply choose to see each situation for what it could be. Okay, I'm reading this one right here. For what it could be, accomplished by hard work and little upbeat spirit. Others make the opposite choice. As for us, we face things that are not nearly as intimidating, and then we promptly decide we're screwed, right? This is how obstacles become obstacles. Okay? But in reality, what you want to do is realize that real strength comes from obstacles and the growth through obstacles. So objectivity means removing you and the subject part from the equation, right? So again, it's like, it's not that the dollar is going to affect us. It's not that the dollar is going to crash. It's not, nothing's going to happen to you. And so you have to remove the you from the equation, because it's not going to happen. Nothing's going to happen to you, right? Everything's going to happen for you. Just remember that. Nothing happens to you, everything happens for you. And I cannot find the quote on which, man, it was such a beautiful quote. But it's all about, I cannot find it, unfortunately. Wow, that sucks. It was a really, really good quote. And it's all about, again, where most people find defeat, you have to make your adversities, so anything that happens to you, you have to turn it into your adversity. Like, you have to turn that into your drive, into your motivation, right? Because if negative things are happening to you, and you just go down on yourself, you get down on yourself, and you're just like, well, now what? Like, what am I going to do? And it's gonna feel like you can't escape, and then you trap yourself in, like, this negative loop, right? In these negative situations. So check this out. I'm gonna read this one right here in the middle section. Ordinary people shy away from negative situations, just as they do with failure. This is why most people can't trade. Okay, they do their best to avoid trouble. Most people do their best to avoid a loss. In trading, most people they do their best, their utmost best to avoid a loss, right? Great people do the opposite. They are their best in these situations. They turn personal tragedy or misfortune, really anything and everything, to their advantage. Okay, don't waste this crisis feeling sorry for yourself. This is actually the quote that I wanted to read to you guys. Don't waste this crisis. Okay, so the dollar dumping, hyperinflation, or whatever, the market's crashing, whatnot, the new world order. Do not waste this crisis feeling sorry for yourself, getting tired or disappointed. Life speeds on the bold and favors the brave. Okay, that right there should tell you guys everything that you need to know about what's going on in the world, the new world order, what we can anticipate. Me personally, I see the dollar like crashing. Like I see the dollar falling hard. Okay, I'm not gonna lie to you guys. Through depressions, through these recessions, through all of these phases, the markets indices tend to continue bullish. Okay, so I don't anticipate anything differently on indices. I do anticipate that they are going to move crazy. There is going to be a lot of volatility. There is going to be a lot of movement. And most of all, they are not, we have a history of price action moving to the upside, bullishness, even though, for example, like the economy could be going to shit, but the indices could still be booming, right? So just remember that, yeah, this is crazy and it makes so much sense. Yeah, thanks, brother. I'm glad that you were able to see that. So do not waste this crisis, guys. Do not waste this crisis. Let me actually move my screen because I thought I was sharing the charts, right? All right, cool. You guys can see my screen all good. All right. So yeah, that's really what I wanted to share with you guys. And it's like, man, it's not nothing negative. Just remember, the last recession was where we redistributed the wealth in the world. Okay, this is the moment where we have the manipulation. Okay, this opening right now, this new world order that's happening is the manipulation. Okay, to take out liquidity and distribute the wealth among the new individuals, the new era, the new generation. That's what's happening right now. There is a huge distribution of wealth, transfer of wealth happening right now. Whether it's to China, Russia, whatever it may be, there's a ginormous transfer of wealth happening right now. Transfer of wealth and power, right? And through this crisis, we will grow. Through this redistribution of wealth, you can take advantage of that. You can position yourself now before everything hits the fan. Position yourself. Put yourself in a position where you're going to win through this recession. You have a recession-proof skill set. No one can take this skill set from you. The language that you're learning to read on the charts, that language that you're speaking, that we're speaking together as a team, as a group, as a union, a unit, right? That no one can take away from you. That's a recession-proof skill set. And so what you can do to prepare for this time in the world is to make sure that you're ready. You need to be ready for this. We all do. There's no more time wasting to going out with people. This is the time to be selective with your time. Be selective with what you choose. Be selective with who you spend time with, where your money goes. Because most people, I promise you, are so oblivious to everything that's going on in the world, but not because they don't see it, but because they choose to avoid trouble. What did that quote said? Most people choose to avoid trouble, but not you. You understand that this is the time to be selective. This is the time to be conservative. This is the time to study. This is the time to grow. This is the time to spring forward and position yourself in a winning situation. Because that's all this is. It's not a crisis, it's an opportunity. This is an opportunity to grow. This is an opportunity to expand. This is a once-in-a-lifetime opportunity. History is being made, and we're a part of it. People are going to be speaking about what we do today, what we will do in the next few years, right? What happened throughout our lifetime will be in history books. So make the best of it, right? Give him something good to read for. Give him some good to look forward to, right? So yeah, guys, you guys already know how I like to keep these really nice, short, and simple. I appreciate you guys being here today. You appreciate you guys, showing up every week after week, video after video. So much support. I see you guys. The names that I see consistently. Just know that I'm watching you guys, and it means the world to me. It means the world to me that you guys are here. It really does. You guys push me. Even if it's one person shows up, I will continue to do these calls. All right. And guys, thank you again for your time, space, and energy. My friend Matthew always says that you can literally be, do, and have anything that it is that you want. Remember that you do not need to have something in order to do something so that you can be something. All you have to do is imagine that person that has those things that you want. Be that person and behave like that person that does those things, and you will experience everything that person has. And when he says that every morning throughout the New York session, I believe it, and I tell it to myself every day. And I want you guys to believe it, because I believe it for each and every single one of you, but I cannot believe in you more than you believe in yourself. So let's win. All right, let's position ourselves in a winning situation. It starts now. All right, take care, guys, and I'll catch you guys next week on the next Technical Tuesdays. Peace out. Much love.